Hello and good morning, everyone. I'm Adrienne,
I'm Lisa.
and we are super excited to have you here with us this morning. We do these trainings every Tuesday and Thursday, so we know it's about you taking time out of your day to learn the products, do the training that we're doing. And so we
Mhm.
greatly appreciate you taking the time to be here with us live. And we do these live for a reason, right? We want you to uh, interact with us. We want this to be a conversation. And we want you to ask questions so maybe some other agents know
Mhm.
what questions they should be asking. And that's kind of how I know a lot of agents learn from these trainings is from the questions that other agents are asking. I love it. It's my favorite part.
Yep.
And so on Zoom, find the Q&A box. The chat is disabled. So just find the Q&A box. If you're on Facebook Live, you just comment. And then if you're watching on YouTube, you can comment and we will answer your questions there as well. So, am I forgetting anything else?
I don't think so.
All right. You want to introduce our special guest?
You go ahead.
Okay. All right. Well, this morning we're going to talk long-term care, and we kind of put this in the health side.
Mhm.
I was debating like, do I put this in life? Do I put this on health? Long-term care is kind of its own thing.
Mhm.
And so we are doing long-term care trainings on Thursdays, just so everyone knows. But our special guest this morning is Mike with NGL, which is National Guardian Life. Good morning, Mike.
Hey, how you guys
Morning.
doing? Hey there.
Thank you so much for being. I think this is your first time on an Eldercare Academy training, so welcome.
Oh, oh, well, thank you for having me.
Absolutely. So it looks like you do have a good crowd here. No one's put in the Q&A yet anything. So if you guys can hear us, see us, if let us know. Have you ever written a long-term care policy? Have you never written a long-term care policy? Why haven't you? Um, did you know NGL had a long-term care policy? Let us know kind of where you're at with it. And then, Mike, I'm going to pass the ball to you. Agents love how we just get to the point on these.
Oh, I'm with you. That's perfect. Hello, everyone. Thanks for having me. And yeah, today we're going to discuss long-term care planning. And one thing, virtually no one wants to talk about this subject. I hate to say it. Most people would rather go get a tooth extracted than talk about possibly needing care in the future. But I'm telling you, this is an important subject. I'm sure all of you understand that this is a really important subject that you should have with your clients. So, as going forward, even if it doesn't relate to what I'm going to go over, our product stuff and the NGL offering, if you want to talk about what are your biggest barriers to discussing long-term care with people, or what's your biggest barriers to doing business, go ahead and let me know in general, right? I've been in long-term care planning or long-term care insurance, I guess, since 1989. So I've seen a lot of this stuff. And what's really cool is that today's menu of offerings, it's not just long-term care insurance. It really is long-term care solutions. I mean, as opposed to, 30, 25, 30 years ago, there's so many different types of solutions out there. And really, with long-term care planning, you're going to find a solution for just about everyone, regardless of, their needs. So anyway, what I'm going to talk about most is NGL's new long-term care solution. It's a product offering. It's called Honest LTC. All right. And we launched it about 2 months ago, about 3 months ago, almost 3 months ago, and it is available in Arkansas and most of the states out there. As you'll see, there are 34 states in which our new product is launched, and we're really happy about it. Um, it is traditional long-term care insurance, right? Now, as I said, with today's menu of long-term care solutions that are out there, you have multifunctional life insurance, you have annuity-based solutions, you even have short-term care solutions out there
Mhm.
for people that have, that may be in substandard health. What NGL offers is traditional long-term care insurance. It's straightforward, honest protection. And the bottom line is for people that want just straightforward protection, and they don't want it mixed up with a life insurance solution, or maybe they don't have, a big lump sum to reposition.
Mm.
Well, traditional long-term care insurance is where you're going to get the most long-term care bang for the dollar. And that's where Honest LTC, NGL's new offering, comes into play. Really, what we tried to do with this product is address, I will say, the middle market, right? Because, today, a lot of people, a lot of consumers, when they want something, what do? Or they want to, a lot of people do their own research today. They go to Google and say, all right, long-term care, I keep hearing it's something I need to plan for. I'm gonna Google and, research, research solutions. And, very often they go down a rabbit hole and they get even more confused. So I think a big thing when discussing long-term care with people is to kind of simplify it. And a good place to start is to talk about just straightforward protection. All right. A few, what you need to know about the product is in states where it's not yet approved, because, we're going to be rolling out as state approvals come in. We're in the middle of a product launch. There'll be a 2-week transition from the old product to the new product. So let me go forward because a lot of you may not even know about, the offering from NGL. So our new product, it's called Honest LTC. It keeps a lot of the best elements of our old product, which was called Essential LTC. And let me go over, kind of the hallmarks in NGL sweet spots. All right, we're known as the traditional long-term care solution for especially for couples. And I'll tell you why. Number one, we have a joint pricing structure. Rather than, like most other carriers, rather than two separate uh, premiums with a discount, for couples, we give one premium, right? So it's
Wow,
a built
that's
uh,
different.
yeah, it is different. It's a blended premium for two people, which a husband and a wife or just partners, as long as they live in the same residence and are in a committed relationship, that is the definition of a couple. And gives you a built-in, one premium, a blended premium, which in many cases can be, it's almost when you compare it to other carriers, it's almost a buy one get one free when you compare to other carriers. Um, when you have that blended premium, a joint premium, you get built-in joint waiver of premium. What that means is, let's say my wife and I, we have an NGL policy, yeah, and at some point, I need home health care, for example, right? I go on claim. While I'm on claim, that entire premium is waived, right? Not just a portion of it, but the total joint premium is waived. So my healthy wife doesn't have to pay any premiums as well while I'm on claim. That's built in, right? So that's a really, a built-in feature that adds a lot of value. Another thing, and this is again kind of a hallmark of NGL and falls under the category of a really good value for couples, but it's our spousal or our shared benefit rider, right? You may know that other carriers have a shared care rider. Most how other carriers usually approach this is they have you know a bridge from one pool to the other, because as we know, traditional long-term care insurance, what it gives you is it gives each spouse basically a third-party checkbook, which is dedicated for long-term care needs. Um, I have a checkbook and my wife has a checkbook. And most carriers will provide a shared benefit rider that builds a bridge between those two checkbooks. So if I, deplete my checkbook and I'm still alive and still need care, well, I can start using my wife's benefits, right? It adds a lot of flexibility. NGL does it differently. Rather than building a bridge, NGL gives you a third pool of money, right? Tangibly more benefit dollars. So if I use up my pool of money and, I'm still alive, still need care, I can go into that third pool, and rather than raid my wife's pool of money, right? My wife's pool of money is specifically for her. So we have, what it does is provides more benefit dollars. And when you compare it to the competition, in many cases, and I'll show you, I'll have pricing examples. In many cases, it is more benefit dollars for less premium. So it is a unique way to address a shared care rider. Now, one cool thing with it is there's almost like a mini spousal survivorship benefit by having that rider and the joint pricing for couples. And again, I'm going to show a uh, a case study that shows that. But essentially, if I were to pass away and let's say I never needed care, right? I bought a lifetime of peace of mind instead, but I passed away and never needed care. Well, my wife keeps her pool, right, her own pool, and she also keeps that third pool. All right. And her premium is reduced. All right. So that's a built-in feature with this plan when you have that shared benefit rider. So again, I will show a case study in which I go into that a little more in depth. NGL also has a 10 pay option, right? So we do have a life pay or a 10 pay option. A lot of people out there, they want to get done in their working years paying premiums. You could do that. Benefit periods with NGL now, you can offer anywhere between 2 and 6 years. Uh, so, to give you an idea on how that would work with the shared benefit rider, let's say you selected a 5 year plan, right? So, it would be 5 years for me, 5 years for my wife. And if we have that shared benefit rider, it's really another 5 year pool of money plan that's added there. 15 years of care altogether, with the ability of one spouse to use 10 years of care. Um, so it's, again, it really is a unique benefit that's in the NGL offering. Elimination periods are 90 and 180 days, and we do have a rider that gives you first day coverage for home health care. A lot of people with our new product are doing that rider, adding that rider because it only adds 10% to the premium. Again, this is pure protection, right? This is for the people that want they don't want life insurance. They don't want an investment based long term care solution. They just want, the most, benefit dollars for care. And that type of person usually wants care right away and they want it at home if care is needed. So it kind of falls under that category. Um, all right, so what are the enhancements we did? So what I went over has been a part of NGL's product portfolio, a base part of the product for 10 years. NGL got into long-term care insurance about 10 years ago in 2016. It's our 10th policy anniversary or a 10-year anniversary of being in the business. And I'll talk a little bit about that as well. Um, But what are the enhancements we made with the new product? Well, I'll tell you this. First of all, the old product had a daily cap, meaning a daily benefit. We now have a monthly benefit with this new product, anywhere from $1,500 to $12,000 per month. With our old product, it was basically a maximum of $300 a day. So, a monthly benefit is much more flexible than a daily cap. Additionally, we enhanced the elimination period, right? The old product had a calendar day. I'm sorry, a service day elimination period in which 1 day of receiving a service counts toward 1 day toward satisfying your elimination period. Now, hey, sometimes if you're receiving, maybe 2 or 3 days of a home health care service in a calendar week, well, that would make, satisfying your elimination period, could be a long time. So we enhanced that. Rather than a service day elimination period, we are now doing a calendar day elimination period, which essentially means as long as you receive 1 day of a home health care service in a calendar week, 7 days are credited toward that elimination period. And that elimination period only has to be satisfied once in your lifetime. And like I said earlier, a lot of people, because we made that enhancement from a service day elimination period to a calendar day elimination period, it brought down the price of that first day coverage for home care rider. So, with the old product, that rider to get first day coverage for home care added 25% to the overall premium. Now it only adds 10. So I would urge you to, when you're looking at this, talk about people only, when they go on claim, people care about two things: how much money is in my pool and when can I get it? All right. So, I think NGL is stepping up to the plate in that regard. Um, all right, some other cool things that we enhanced with this new offering is rather than just 3% and 5%, compound inflation options, we've added 1% and 2% and 4%, which is important. Again, like I said, we're really trying to reach the middle market with this product, and by being able to offer, just 1 or 2% inflation, a little bit inflation, but keeping the price down, the ability to create an affordable, customized long-term care plan for someone is really what we're trying to achieve here. So, and furthermore, a lot of states, if you're not aware of what the, partnership is, right, which only applies to traditional long-term care insurance, most states have a private and public partnership program, which allows policyholders to protect a like amount that they used in their long-term care benefit to be protected from Medicaid spend down if they should deplete, their private insurance. And many states allow for just 1% and 2% inflation to count and be partnership eligible. So if you want to talk a lot more about this, listen, feel free to reach out to me and I'll, give you examples. Other, client-friendly benefits that are with the plan are, like I said earlier, there's a blended joint premium for a couple. But what if one person is, you have someone who's in a couple, they have a partner or a spouse, and that partner or spouse, does not want to apply, doesn't want the insurance, or is ineligible to apply due to a health condition? Well, as long as you're part, you have a spouse or a partner, whether that partner, applies or not, we now offer a 5% discount for that person. Additionally, unlike the last product, which was age nearest birth date, this plan is now current birth date, which is makes things a lot easier. And now we do have an alternate plan of care. We have language in the contract that states that if there's some form of long-term care service, which in the future, right, this is, 20, 25 years in the future, there's a type of, something new in the long-term care delivery system that does not yet exist, we will pay for it. As long as it's agreeable to you and your doctor, we'll find a way to pay for that, even though it's doesn't exist yet today. So it's just an avenue to pay for those sorts of things that don't yet exist. What's an example for that? Hey, maybe 25 years from now, home health care will be delivered by robots or something. You never know. So there we go. Exactly. All right. So, hey, any questions so far on the product?
No, not yet. None have come through, but I think, I mean, I'm just zoned in when I'm
Okay. All right.
listening. I don't,
Perfect.
and I honestly don't know kind of what questions to ask for long-term care yet. But
No,
you
I
did
understand.
have Patty. She said she's listening in and she's just learning about long-term care.
Okay. All right. Great. Well, for those that are new, a lot of what I said you may not be totally familiar with. I'm more than happy. I'll have my contact info at the end, and feel free to reach out to me at any time. No, no problem. Let's talk about
Awesome.
the pricing a little bit. Now, as I said, one of the goals with this new product offering was to make it attractive to the middle market. Right. So unlike most new product launches, which, create, like a fire sale for the old product because the new product, the rates are so much higher, that's not the case here. And the reason why this product, despite the all the enhancements I just went over, the reason why it only costs about 3% more than our old product is because we got rid of the unlimited or lifetime benefit period, right? So our old product, Essential LTC, had a lifetime benefit period, which gave you an uncapped pool of money. As you saw with our new product, the highest benefit period we have is 6 years. But this is a good thing. By getting rid of and minimizing the risk exposure by even offering an unlimited benefit, we were able to keep the pricing competitive with this new product because hardly anyone bought lifetime anyway, because of the price for it. Most people, lifetime, that sticker shock, most people buy a 3 or 4 year plan. To tell you the truth, the average long-term care claim is about 3 years anyway. So by not offering and minimizing, the risk exposure for the company, we were able to make the pricing for the new product really, really competitive. And what you're seeing here is an example of a 3 year plan for a same age couple. Right, the monthly benefit is $4,500 a month. 3% compound inflation increases for life, and this shows the shared benefit option that I went over earlier, right? Which is a third pool of money for NGL. And what I'm showing here are I would say the two other main traditional long-term care carriers. And it does include their shared rider, but keep in mind that is a bridge rider, right? It doesn't provide a third pool. Provides a bridge from one spouse's pool to the other. So that's why under Lifetime Max, you'll see that's why NGL is so much more, right? It's a third more benefit dollars for less premium. All right. When compared to the other main traditional LTC carriers. So as you can see, and this is the ultimate sweet spot, right? Again, this is where NGL plays for especially for couples, especially couples that are close in age. And these are same age couples you're seeing here. That is the sweet spot price wise for NGL, Okay. Again, it's traditional long-term care insurance, right? No, return a premium or anything. If someone says, "Oh, well, listen, I got to have double peace of mind, right? I got to make sure if I never need long-term care, I get, my premiums back." But I get it. I totally understand. There are plenty of great hybrid options, products out there for that person. But this is for the person who just wants the most long-term care protection possible, right? At a really competitive price. So there you go there. Um, Here's another spreadsheet showing the 0 day elimination period rider, right? The other one showed a 90-day elimination period. This shows first day coverage for home care. And let's face it, today people position long term care insurance as anti nursing home insurance, right? It really is stay at home insurance. The vast majority of claims are paid as home health care. And, having a plan in place really can prevent you or at least delay having to go into a facility. No one wants to go into a facility, and especially family members don't want their loved ones to go into a facility. Having that third party checkbook that pays for home health aides really, can be a godsend toward achieving that goal of staying at home. So anyway, as you can see, NGL plays really, really well here. The next sheet is not just a 3-year plan with shared care. This is a 5-year plan without shared care. And again, this I just wanted to put there. This shows that NGL provides a really, really good value for couples. All right, moving on, and I'm going to kind of go quickly here because I want to get to some other stuff which I think is pretty important. Uh, Females, right? So these are females applying individually. Single female here. It does not. This does not include the 5% partner discount. So if the females here, if the women here had a husband at home, but the husband doesn't want to apply or is ineligible to apply, then the rates here would be 5% less. Anyway, still looks really good for single females, right? As you can see. So, nice pricing advantage there. And here's the same for first day coverage for home care. And then with a 5-year plan, NGL still plays very, very well, very competitive. All right. And finally, for men applying individually. And by the way, here's a quick quick suggestion for those of you when you guys are talking about long-term care planning. Very rare that single men are jumping out of their seats to apply for long-term care insurance, right? Normally, the way it goes, when you're, especially when you're selling to a couple, it is the wife who is driving the sale. And why is that? Well, women know what it's like to be a caregiver, right? Especially if they've, cared for their, toddler growing up, caring for kids, and they get it more than men do. Men seem to take, more of a, well, how much is it going to cost? It's not worth it, and if I need care, I'm just going to shoot myself. That sort of, it's just the way it usually goes. So, when you're having a discussion, especially with a husband and wife, you'll find that it's the wife who's driving the sale. All right. So for men, single men is not the NGL sweet spot, although we're very competitive, and you'll see it's remarkable how close in premiums actually NGL is with the other major carriers for men applying individually. All right. Yeah. Any questions? And do I have time to do a quick case study here?
Yes, Tommy had a question. He said, what types of things do long-term care currently pay for?
So, good questions. Long-term care covers all levels of care given in all venues. So, essentially, big picture, it covers a home health aide or home health care attendant to come into your home and provide care, whether it's hands-on or standby care. And it'll provide all levels of care, even if you need an RN or a therapist in the home. And then it covers care in the community, such as an adult daycare facility where you go just during the day. It'll pay for that. Then you move on to, I will call, facility-based care, and it'll cover assisted living facilities. Sometimes they're called memory care facilities, depending on the reason you're there. It'll pay for both room and board in those facilities up to the monthly maximum your policy provides. And then, of course, it'll cover nursing homes. That's, I guess, yeah, and that's what, most people would rather not do. But yes, it does cover nursing homes as well. So I will say the whole range of long-term care services.
And would you need a long-term care license to sell this product?
Yeah, well, so most states require you to be to have appropriate long-term care CE to sell
Do
long-term
you
care
know
insurance.
about Georgia? He's asking specifically
Georgia
about
does,
Georgia.
yes. Georgia, yeah, you have to do an initial 8-hour CE course, which, by the way, won't take you 8 hours. It'll take you, half an hour, 45 minutes. And then every license renewal period, there is what they call a 4-hour refresher. But as long as you have your life and health license, and then that CE, you're good to go.
Yes, and then Patty was curious about because this is a new product, what the rate increase history would kind of look like, or increases in premiums would look like.
So you know what I'm going to do? I'm going to cruise for time purposes. I'm going to cruise through uh, the because that's kind of repetitive. I think that I'm gonna go right to here and answer your question, and then go from here. So, um, NGL has never raised rates on existing policyholders. So I'll tell the NGL story a little bit.
Okay.
NGL got into long-term care insurance in 2016. NGL is a conservative Midwestern carrier that was late to the long-term care game for a reason, right? So the reason why a lot of people may be hesitant about traditional long-term care is that back with the inception of long-term care insurance, the pricing, all these carriers, most of which aren't in the business anymore, priced the product based on assumptions rather than actual long-term care claims data, right? And the first long-term care, comprehensive long-term care insurance product was in 1988, and then throughout the 90s, other carriers got into it, but they were pricing those products based on guesswork, right? Because there wasn't a body of experience from which to base pricing on. Thus, that pricing was not accurate. Now, one of the main elements of pricing an insurance product, especially long-term care, is persistency, meaning the lapse rates. How many people are going to lapse this product? And in the early days of long-term care insurance, and I mean the late 80s and throughout the 90s, carriers anticipated that about 12 to 15% of the policyholders were going to lapse their policy. Well, guess what? Here we are in what year is it? 2026, 2020, whatever year it is, 2026. What do we know and what have we known for probably the last 10 or 15 years is that the lapse rate with long-term care insurance, uh, rather than 12 and 15%, it's actually 0.6%. It's under 1%. No one lapses this stuff. That's where the carriers really got it wrong. So from the get-go, NGL priced this product using lapse rates that totally align with reality, right? So there was no guesswork with the pricing of this product. It was based on, you know, true long-term care pricing data and experience. Thus, NGL has never had an in-force rate increase. And while the rates, you'll never have a traditional carrier that says the rates are guaranteed. This is probably as close as you can get. There are no plans to raise rates on in-force business. Also, NGL has no, legacy blocks of business to manage and apply rate increases too, because from the get-go, it's been a very clean insurance pool. So,
That's good.
yeah,
That
absolutely.
sounds
So,
that sounds stable.
yeah, exactly. And that's the big, and that addresses, and it's funny, again, people do, their own research today, unlike the 90s and early 2000s, in which people can not do that. you know, People go on, consumers do their research, and what are they going to find when they, look at long-term care insurance? They're going to say, "Oh my God, rate increases," and people jump to the conclusion that a traditional long-term care product, all they're going to do is get, their rates increased on them, and they're going to be priced out, which is far from, that's absolutely not the case these days. There are about a half dozen carriers that sell traditional long-term care insurance today, and I can unequivocally tell you that those half dozen carriers know what they're doing. I think NGL has kind of a special story because, from the get-go, we don't have, old books of business to manage. But regardless, long-term care products sold today are priced on actual experience. All right. I know we're running, a little bit, 5 minutes. I just want to go over two quick things and we'll fire it up for questions. And these aren't, this isn't NGL related. This is more, tips on how to have the conversation. Number one, we're talking about, and the reason we're here is because of lifespan, right? People are living longer than ever. And, because of that, because people are living longer than ever, long-term care insurance is a big thing, because just because we're living longer doesn't mean we're getting any healthier, right? So longevity is a big thing, and you need to plan for longevity. However, and that's why we're always talking about that. Hey, you're going to live to a nice old age. You need to plan for it. We should be talking about, rather than lifespan, we should be talking about health span, right? Because there's an old saying with long-term care insurance, it's an underwritten product, right? There's an old saying is that your good health is what buys long-term care insurance. Money just pays the premium, right? There are two types of currency with the business we're in. You have your, money, which, pays for, a lot of things. But then you have your health currency, and your health currency is very, very valuable. People just don't know it. Unfortunately, people aren't jumping out of their seats, you know, raising their hands to buy long-term care insurance until they go to the doctor, and and they're diagnosed with early onset of Parkinson's and say, "Oh, well, time for me to plan." Guess what? That's not planning, that's crisis management. So you got to be, healthy to get this stuff. So we should be talking about health span. And you know what? Google it. It's really interesting. So the average health span in America is just under age 64. Right. Those are, once you reach age 64, hate to bum you out, but the chronic conditions are going to start piling up and just may affect your health span, right? And affect your health currency. So, that's what we should be talking about. The average age of a long-term care insurance applicant is age 57. For a reason, right? You know, Go out there and tell people to take advantage of their good health and get this stuff before the chronic conditions start piling up. So that's number one. Number two, and then I'll close it out. Words do matter when you're talking about this product, and the one thing that can really harm you is talking about this stuff and positioning it as nursing home insurance. Like I said, I've been in long-term care insurance since 1989, and all my friends still call me Mike the nursing home insurance guy, and that drives me nuts because it's not nursing home insurance. It really is stay-at-home insurance because products today are really geared toward keeping people in the home because that's what clients want, and that's what the insurance carrier wants as well. So, rather than call it nursing home insurance, call it stay-at-home insurance or anti-nursing home insurance because that truly is what it is. And also, you know, I see one mistake I see, and maybe a reason people don't want to talk about this issue is the negative imagery. This is, for when you get sick and old and frail and you need, medical care and you're sick and, no one wants to hear about that. Talk about, really a better way, better terminology is, hey, listen, this is what this does is it provides assistance for when your health becomes compromised, right? That's just a better way of talking about it because people can relate to that, right? People are like, oh yeah, you know what? My grandmother, she wasn't able to do certain things and it was really tough to, provide assistance for her and she only needed assistance certain times during the day. Talk about that sort of stuff rather than becoming old and sick and frail. Um, and again, you know, another thing, and especially with the NGL product offering, we're trying to make it, appealing to the middle market. And, one mistake you might make, and there are plenty of cost of care studies out there. And I see a lot of, agents and advisors make the mistake of saying, all right, well, the average cost of care in your area, and they automatically go to the cost of a nursing home, is 12,000 a month. I can tell you, I live in South New Jersey. The average cost of a nursing home here in South Jersey is about 15,000 a month. 15 grand a month, right? Don't design a long-term care policy showing a monthly benefit of 15,000 a month because they're just going to go into sticker shock and then you're going to wind up peeling it away until you find something they can afford, and you may just say, hey, well, all right, I originally showed you 15,000 a month, we peeled it down to 5,000 a month because hey, something is better than nothing. That's not the way to show a plan design. Really start low and say, listen, with long-term care, we're trying to make an event manageable rather than the event managing you. So a little goes a long way is how you should talk about it. Position it as home health care, stay at home insurance, and explain that even a little goes a long way, especially in helping the family keep their loved one in the home. So that's how you should talk about this stuff. And then again, I think a major power question that really, doesn't make you look like you're trying to throw a product onto someone. A lot of people say, oh, well, do you have long-term care insurance? What do you know about long-term care insurance? No. A very general question. I like to say it's the ultimate power question is, what is your plan for when your health changes? That's it. And no matter how they answer that, you're going to have an avenue for a very meaningful discussion about, why long-term care planning is important. And then, you can talk about, fact that, Medicare doesn't pay, the facts about what Medicaid actually is and that sort of stuff. So, anyway, I know we went over a little bit. If you have any questions, please let them fly, or of course, reach out to me anytime if you want to, schedule one-on-one time, or if you just have any questions or anything you'd like to discuss. So I'll throw it back to you guys for any questions.
Awesome. Thank you so much, Mike. That was a great presentation and I learned a ton, and I hope that everyone else on here live with us learned something new and are excited about this new product. And if you're watching the recording also,
Yeah.
If you're interested in getting contracted with National Guardian Life,
Just give us a call.
please reach out to us. We want to be there to help you be successful selling this product. So you can just give us a call at 1-800-777-9322. We have one phone number, no recorded line. You're going to get one of us when you call. So just let us know if you do have further questions, and if you do need the contract, we're happy to help.
Yep.
All right. And thank you so much, Mike, for taking the time to talk to all of our brokers, and we will see you next time.
Thank you.
Thank you.
All right,
Bye-bye.
thanks. Bye, everyone.
Bye bye.